Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that all the rich men north of Richmond have now decamped to Jackson Hole, Wyoming, and are awaiting Fed boss Powell's speech. So today we're left with the granular details of the American economy, which is actually doing remarkably well for the non-rich men south of Richmond, even if they can't actually acknowledge it. New jobless claims last week fell to under 200,000, which is a low benchmark and confirming their labour market is in pink health still. American durable goods orders in July recorded a rather sharp decrease, down 5.2%, following a 4.4% rise in June. But the July drop is all about the timing of large aircraft orders. Excluding those, durable goods orders rose in July, and overall they're up 3.3% higher than a year ago. Orders for capital goods are 4.2% higher than a year ago. None of this suggests the Rust Belt activity is under any special pressure. And the Richmond Fed's more broad national activity index pointed to a pickup in economic activity in July, again belying the doomsters. And this in turn is confirmed by the Kansas City Fed Factory Survey, which reported a sharp recovery in their key measures. And firms surveyed indicated they expect a further pickup in the months ahead, so hiring remained positive there. The rich men north of Richmond seem to be organising an expansion that is keeping those south of Richmond in a positive economic state. New research shows that Americans won't leave their jobs unless the new offer is $79,000 a year or higher on average, 8% higher than a year ago when the CPI inflation is only 3%. That is the highest on record. And for men who seem attracted to the viral anthem, they won't switch jobs unless their offer is $91,000 a year. They may feel left behind, but clearly it is their sense of entitlement that is the thing that is unmoored. In Turkey, the shift back from the disastrous Erdogan experiments with their monetary policy positions is requiring some rather sharp changes. Today they raised their policy interest rates by 750 basis points to 25%, following a 250 basis points hike in the previous meeting. This rate has risen from 9% in June. The recent rise in container freight rates hasn't been maintained in the latest weekly assessment. They fell 3.5% last week from the prior week, with falls occurring in all major routes. Bulk cargo rates reversed to be lower too. The US Treasury 10-year yield will start today at 4.23% and recovering 3 basis points from this time yesterday in a small bounce. And the price of gold will start today at $1,917 an ounce. That's unchanged from yesterday. And oil prices are down yet another 50 US cents, at just over $78.50 a barrel in the US, while the international Brent price just over $82.50 a barrel. And the Kiwi dollar starts today another 0.5 cent weaker at just on 59.2 US cents. Against the Aussie was softer at 92.2 Australian cents. Against the euro were 0.25 cents softer at 54.8 euro cents. That all means our trade weighted index is now 68.4 and down 40 basis points from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on